Hey everyone. Accidentally didn't unmute myself over there. Hope you guys had a great day. It was a green day. Tim, hi Tim, hi Illinois green farmer. Green day today. Yeah. So hopefully you guys made some nice profits today. Uh, Before we get started, if you want to join my Telegram channel, that's the link to join. That's the only place that you'll officially hear from me other than this YouTube channel and the various trading pub live streams that we have available for you guys. No one is ever going to ask you for crypto. No one's ever going to ask you to give us money to invest on your behalf. If you see a video of me saying something like that, it is fake, it is AI. There are people who are using my image, my voice, my video likeness to try to convince you to send them money. Please do not do that. It is not me, and those people are just out to scam you. So if you want to hear from me officially, this is the place, or you can email me, kane@investpub.com, and of course, this this YouTube channel. So Green Day, we quite strongly moved through that all-time high. So what I was saying before, where we might hit and pause at that previous all-time high, I was wrong about that, and we went very clearly through it. So what do we do from here? So that CPI number is what did it. It was a major enough catalyst for this market to be enthusiastic and start moving higher. First, we wanted to evaluate the strength of this. We want to see if it's got legs, if it can continue to move upwards, and if so, what we're going to do about it. How do we take advantage of that? So the first question of, well, is this going to be just pop up and fizzle out? What are the chances of that? Well, the first thing that we're going to want to see is the breadth, and if this is just in specific sectors or if it was broad-based. So before we talked about how we might pop back into this channel before breaking out. Now we're at the top, or we broke through the top of that channel. And so the probability shifted to bullishness. Yesterday I was talking about how I was getting more and more bullish based on what I was seeing. And today's movement completely invalidated what I was saying before about this range right here. We could pull back still, and actually, based on how far we are from that EMA 8, there's at the very least a tiny baby pullback. But what it looks like it could happen over here is either we chop a little bit or we move a little higher, then pull back and retest this previous all-time high right here. So I'm just going to delete this one for now, because that probability has gone down. And then what we're working with is either chop sideways over here, then up, or up, then pull back to near these levels. By the time it does that, this EMA 8 may be near that level as well. So it would be kind of same thing, right? Two different shades of the same color, basically. Just pull back to that EMA 8. So we're going to want to see, we're going to take a look at RSP, Dow Jones, QQQ, all the major indices, just see how we're doing over there. So if I look at the RSP made a nice surge upwards, and this is a confirmation from, you can either look at it one of two ways. It came down, tested that MA50, and we never confirmed until today. Or you could say, yeah, it came down, chopped around, came pretty close to that MA50 again, and then broke out, bounced back again. Either way, doesn't really matter, same thing. If we just treat this mess right here as a 6-day bar, a single candle, 6-day bar, then that would be a bounce upwards and confirmation. That's how I'm basically looking at it. So RSP is gaining some legs. It's looking kind of good. So that is indicating that we're getting some breadth in here. It's probably not just concentrated in things like tech and chips. So let's take a look a little bit further at our QQQ. QQQ was always strong. It was always stronger than the S&P 500. Yesterday and the day before were already, looks like, all-time highs. So 3 consecutive days of all-time highs, moving up quite strongly. There's just a nice little trend right here moving. We do QQQE, not as strong as the RSP. So this is a bounce, and you would call that a confirmation right here, but it got stopped right at that EMA 20. So we would still want to see another day of it moving upward before we got comfortable with QQQE. We look at the Dow Jones. Dow Jones is looking good. That is a bounce. This was already a confirmation, but we did chop, and then we moved upwards. The other thing about this, is it the RSP that I was looking at? Yeah, the other thing about the RSP is what I emphasize in the post-market show, which is longer term trend of the MA50, and then that EMA 8, if we're using that as the shorter term trend, then what we see is that this was following it, then it reverted back, and then now reverted again to start matching the longer term trend. So that is a bullish sign for the RSP. And then let's take a look at IWM. Yeah, that is quite a bar. The same thing. It looks just like RSP, except this is a huge bar. Same thing with the short-term trend moving up to match the longer-term trend. That is aggressive. So what is likely to happen in IWM here is that for at least a few days, we're probably going to get an inside bars. So basically, tomorrow's high and tomorrow's low are probably going to be lower than today's high and today's low. And then the day after that would be Thursday and Friday. So probably for the rest of this week, we're going to be defined by this one bar. It's unlikely that we're going to be able to break out so soon after such a big bar right here. It was decent volume as well. So we're going to look for a chop sideways in IWM, but that's looking pretty positive. Someone asked me before, well, hey, I think maybe Roger or someone, or maybe one of the other guys, they were showing us how there was a big disparity between IWM and QQQ, and that's okay. It doesn't mean that the QQQ or the SPY has to fall or IWM has to fall. It could be that IWM rapidly gains to catch up to the SPY or QQQ. So that we could be seeing that. Of course, it could be the other way around where the major indices pull back to match these lower term stocks. But if we get a rate cut, so if we look over here in the Fed Watch, we're now pricing in a 94.4 chance of a rate cut in September 8th. That is positive for small cap stocks. One, a lot of people say it's because rates, right? Rates are cheaper, it makes their debt cheaper, it's a little easier. But we have to remember that the Fed funds rate is not the long-term borrowing rate. So are these companies, are they borrowing at 10-year, 20-year, 30-year term? Or are they borrowing at a shorter term? If you're a really big S&P 500 company, you have a mix of terms. You've got 30 years, you got 20 years, 10 years, 5 years, 2 years, and short term. So you got a big mix of them. And then what happens is as they roll off, you've got to manage that mix. Actually, my first firm that I worked for out of school as an analyst and then as a junior trader, they folded over during the financial crisis because they rolled out their borrowing, became shorter and shorter term until everything was all that 90% of the borrowing that they had was all due on the same date, and then they just weren't able to refinance everything that they needed to, and that's how they went belly up, unfortunately. So that is more likely to happen if you were a small cap stock. Just like creditworthiness. If you're a small cap stock, you're not that mature in terms of a business, you're borrowing. It may be that if you're trying to issue corporate paper, or if you're trying to borrow a bank loan, I shouldn't say corporate paper, I should say bond. Corporate paper is short term. Bond, or if you're trying to borrow from banks, the chances are that you're not necessarily going to be able to get a 30-year or 20-year loan. Just like if you have a terrible credit score, the chances are of you getting a 30-year mortgage are far less than getting a 1 month hard money loan. So it's the same deal here. These small cap stocks are more likely to have short-term debt rather than long-term debt. So that is a positive for them because the Fed watch directly affects the overnight rate, and then that has spillover effect on the 1 year, 2 year, 5 year, and less. The further out we go, the less effect it has until we get to the 10-year plus, and maybe it does, maybe it doesn't. But that end of the curve is pretty much completely dominated by the bond market. So Wall Street will dictate that, not the Fed funds. So this pricing of 94.4% chance of a rate cut, we must have not gotten a great CPI number. I didn't look this morning, I should have. 3.1, so we got a little bit higher than what was consensus, and it's 0.2 higher than what the prior was last year. So we are increasing in inflation. Yeah, so we didn't get a great CPI print. I don't know why you would cut rates though. Cutting rates is inflationary. But in any case, the Fed funds is the Fed watch is pricing in, or basically the bond market and the futures markets are pricing in a 94.4 chance of a rate cut, and that is favorable for these IWM type of stocks, which is probably why you saw this jet up like this, 3% in a single day. That's pretty big for IWM until we hit this high right here, or this little resistance. But tomorrow, if it can go up, great. But like I said, we're probably going to see inside days for a couple of days. At the very least tomorrow. Why? Because we've got the other major piece of economic data coming out on Thursday. So just like we said that, hey, we're probably not going to see a lot of movement on Monday because we had that big CPI number coming out. And then there was a big reaction to the CPI. I said, if that number came spot on, maybe we won't get a big reaction. So we didn't. We had a little bit of a difference. There's a fairly large reaction to it. And then tomorrow, we're going to be in the same boat that we were on Monday. We're going to be sitting here waiting for that PPI number to come out, wondering if that PPI number is going to send us one direction or the other. So most likely Wednesday is going to be fairly muted and have a fairly limited trading range. If we feel strongly enough about the CPI, that might not happen. So for example, if we said, oh, that CPI number, it gave us such a strong conviction in a direction, we don't really care too much about the PPI. Or if the feeling in Wall Street is, hey, the CPI, PPI, they're going to tell the exact same story. So we already priced everything in today, or we're going to continue to price it in on Wednesday. And then that way, when PPI comes out, if we're right, then there's not another huge move. It's just kind of par for the course. But then if we were wrong about that PPI number, then there would be a big reaction. Right? So most likely, we're going to sit on our hands. We did some activity in reaction to CPI. Then we're probably going to wait for that PPI. And then once that comes out, we're free to have a big reaction again. So tomorrow, for now, based on not seeing anything else in the market, I'm expecting it to go to quiet down and be muted again and just wait for that Thursday data. So most likely, for IWM, we're going to have a kind of limited range or maybe even inside day on IWM. It's probably kind of the same for SPY. I would expect the same thing because we're waiting for that Thursday data. All right, so far it is looking pretty bullish though. So unless PPI comes and wipes out that sentiment, then we're probably going to push higher and then probably pull back, and then we'll see from there. All right, let's see what you guys are saying. Let's say hi to some more people. Hey, Lise. Hey, Ron. Robert C. Fazio. Roger. Cosmic Sparrow. Good afternoon. I don't think I've seen you here before, Cosmic Sparrow. Is this new for you? Marlon, great to see you. I don't always watch your live sessions, but I always get. Thank you. I appreciate that, Marlon. Thank you very much. Venkat, yeah, Roger was mentioning that big coats are massively short IWM. Oh, that's interesting. Well, they sure got squeezed today. If there were massive shorts on IWM, that is a short squeeze. That's probably another reason why we got a large bar. So if that's true, then I could be wrong. Okay, if there was a lot of shorts and they got squeezed today and they didn't cover or they didn't finish covering, they could continue to get squeezed tomorrow. So I didn't see that data. So everything that I said before, I could be wrong about that inside day on the IWM and just floating sideways if these guys are still being squeezed. Okay. So we'll just have to see how that turns out tomorrow. All right. Hi Kay. SSD broke out of the upside. The only thing is that it was wide bid ask. Yeah, SSD on the options, you mean? Oh, yeah. This is the one you were asking about yesterday, right? Or you said a Maverick. You said it was a good Maverick trade. Yeah, but that was a great Maverick trade. But unfortunately, yeah, if it's a wide bid ask, it's hard to take advantage of that, unless of course you buy the stock. X food and energy was worse. Okay, yeah. Does the Fed give more attention to PPI? It's different. It's different. So one is hitting the industry and business, and the other one is hitting consumer. Ultimately, consumer is what they care about a little bit more, but PPI will help give you an idea of what might hit the CPI further down the road. So usually, if I'm pretty sure, at least my intuition, my instinct, based on my feeling over all the years of watching this, is usually PPI comes out before CPI. I think most of the time, but it didn't this time. So usually PPI will give you an idea of what CPI will come out as in the future. Hi, Bernadette. Okay. So let's take a look. Yesterday, I also gave you AVGO. We were looking for a neutral to bullish trade. That definitely moved up. So that was a positive. Let me see. And then we'll finish up with the market analysis. So it looks like this AVGO trade would have done quite well. I don't know if you would have had an opportunity to get in on it before the move this morning, but assuming you could have gotten in at $2, you're already up $50. Is that true? If that's true, then you're already at max gain. You just close it. You just close it right now because you're basically at max gain. Why would you wait? I guess you could wait a couple days because you're far into that profit zone. You could wait, but if you're just waiting a couple days just for $1 or $2, why? It's pointless. Just take your profit now. The reward risk ratio is no longer makes sense, right? Because you're waiting to make $1 and you're risking your $49 that you've already made. So if you were able to get in on this and then you're able to get out anywhere near within say 5 cents of 250, then I would just take it. Okay, and let's see what else we had. Oh, gold. Let's see what gold did. Nothing. All right, nothing. Yeah, so I don't know what all the hoopla was about with gold. Like, oh, gold is going up. GC, gold futures. Yeah, absolutely. Nah. So that GLD, we had a example over here. The iron condor on GLD is doing quite well also. Okay, so it's up 34% unrealized gain on this. Okay, and then we always have to take these with a grain of salt. I do want to emphasize that. We want to make sure that we have tight bid-ask spreads before we go in and say, oh my God, I'm up 34%, right? Because that could be really deceptive if you have wide bid-ask spreads. It's something that I emphasize often. So I don't want to fall into the same mistake of saying, oh, look at this great profit we have. and if there was going to be terrible bid-ask spreads. But this one, look how tight that is. That's only 3 cents. This is the wrong one. That's SPY, GLD. Okay, so this was gold, August 15th. Only a couple more days left in this. We have the 305, 306. 305, 306, 4 cent right there, 6 cents, very nice and tight. And then 316, 317. Yeah, 1 cent here, 2 cents here. Okay, so that's plenty liquid. Those are very tight bid-ask spreads. So in that case, we are comfortable saying that, yeah, it should be right around a 30. Like you could, if you wanted to liquidate it right at the end of today, or perhaps if the prices don't move at all by tomorrow morning, then you could realistically expect that you would have made a 34% gain. So this is an okay number to quote at the moment. So that trade is doing very well also. But most importantly, it's well inside my max gain zone, right? So maybe at the low today, we're going, oh, well, maybe a little close, but we're still well inside that max gain zone. Did not get filled on AVGO. That's unfortunate. Put on your first morning payout SPX trade. Oh, great. Great job. Hopefully it did well for you. Or, you mean for tomorrow. So maybe, hopefully it works out well for you tomorrow. What do you think of all this dark money is coming from? Someone bought 30,000 puts on CMG today with, I don't follow dark money because, yeah, it's a thing, but how big of a thing? It's like Wall Street institutions aren't sitting there trying to game each other's dark pool trades. It's dark pool is a tool that they utilize in order to get into position and go their buy and sell campaigns. Okay, so it's more meaningful to know if they're going above the ask or below the bid. So that would be more meaningful information, especially if they're significantly above or below. But just the fact that someone puts a dark pool trade in at however many, that's not super significant. So, dark money happens every single day. So just the fact that there's a dark pool trade, it's not, to me, that's not meaningful information. Sympathy play on Kava. Which one are we talking about? Sympathy play on Kava. Kava, I believe, is restaurant, right? Were we talking about a restaurant? I don't know. I missed the, CMG. You're saying about CMG. A CMG trade is probably a sympathy trade on Kava, okay, because they have earnings, or they had earnings. They just announced earnings. Okay, yeah, that's true. That's a good observation, Cosmic Spiral. Yeah, there's probably instead of going directly into Kava, it's, you could go into a lot of related instruments or related stocks, such as CMG, and their business model is very similar, right? I think basically Kava, I believe, is Mediterranean style food, but the same concept. You go in and you order and you build your own bowl or whatever it is. So it's a very similar business model as CMG. So that makes sense. That a sympathy play on Kava makes sense. Okay, so let's finish up with this SPY. So we've discovered that this is probably a wide, large breadth. So that gives us even more legs to stand on in a move upwards. So, and then we have our volatility environment is sub 15. Wow. I did not realize. I did not pay attention today and realize that VIX went below 15. That's really interesting. So are we going to expect that we're going to be in like a 12 to 15 volatility regime? Probably not. Probably not. I kind of doubt it. So if that's the case, then we can expect that to pop back up. If it pops back up, that's going to give temporary pause or pullback to the S&P 500. Okay, so that suggests what I was saying earlier about the inside day. Okay, so it chops sideways inside day, maybe even a little bit of pullback because we are getting a little far away from that EMA 8. So what's the EMA8? It's at 635.30. We can just say, how far away are we from 635.30? And we are 1.25 ATRs away from it. So we're getting up there, right? We're pretty, so 1.5 ATRs would probably be like a pretty normal place for a pullback. 1.25 ATRs would not be unheard of for us to pull back to that EMA8 as well. Of course, it can get further, like this is probably further than 1.5 ATRs from that EMA8. Well, but then it did pull back. So another bad example. This one is probably about 1.5 ATRs, and then it went up for another day. But of course, that EMA8 also went up quite significantly that day. So it probably sort of maintained it, and then it pulled back. So it doesn't mean it has to be tomorrow, but soon it'll probably pull back to that EMA8. And what we were just seeing earlier, it just implies that, yeah, we could probably pull back a little with the VIX. That VIX is probably not going to stay that low. And so it's probably going to revert probably tomorrow, because VIX doesn't like to stay at extremes for very long. See that? It hits there and then it reverts. I guess here it stayed, I guess, sort of for another day, and then it reverted. But VIX doesn't like to stay in place for a long time. It likes to move between levels. And so I would imagine that tomorrow it would start going back up. That would mean a sideways chop at the very least, if not beginning to pull back towards that EMA8 right there. So remember, IWM doesn't have to move the same way that the SPY does. There's high correlation, but you can see today that move was much larger, but unlike SPY, we are far away from all-time highs. So they don't have to, maybe the general shape will be the same, but again, they don't have to do the same thing. So IWM could get squeezed a little bit further while SPY is pausing or pulling back a little bit. Let's take a look at I'll do sectors last. So we'll do breadth. So let's see. And then I think I told you guys I would do an equal move ratio, even though that trade is basically over, but we could do equal move ratio. So breadth, if we go over here, we look at our performance, basically momentum levels, and then we look at things like staples, 68%, 47%. What we want to see is which direction is it really moving. So if I see, all right, for example, comms, okay, we got 60% above their 50-day moving average, 78% above their 200-day moving average. That's looking pretty strong on the surface. But what I want to know is, did we arrive at that 78% from a drop, or did we arrive at this 78% from a rise? Okay, so that makes a difference. And same with this 61%. So I'll click on that first. Okay, and it looks like that is a drop. That's a drop. And then if we go and we look at the 200-day on comms, that is a rise. It's a rise. So this overall is rising upwards. So on the longer term, telecom is still on the rise, whereas on the short term, it looks like it pulled back a little bit. So what do we expect? What is the normal expectation? The normal expectation is that the short term reverts to the same direction as the longer term. So 200-day being a longer term, that's a rise. And then if we look at the 61% over here, that was a pullback. That's a pullback. And so our expectation was that when this is done pulling back, this will bounce up and revert to that longer term trend. So actually, that is bullish. So if we look at XLC, that's definitely bullish. Okay, so that is a bullish breakout right there off of this high right here. Or actually, technically, I would call it this. Okay, Come on. Right there. Okay, so it hits that high right there. We pull back, retest it, pop up, false breakout right there, pull back, retest that level, and then another breakout right here. So you just want to say it could give a false breakout. The good news though is that it's a green bar and it did close pretty much at the highs versus this red bar which closed pretty much at the lows. That is a stronger indication that this is probably a true breakout, and either it'll run and then pull back, or it'll kind of chop sideways and then run again. That is it doesn't have to do that, but that is the higher, those two are the higher probability possibilities in something like XLC. So that is net bullish overall for the markets. So again, SPY, I'm probably at this point, I'm based on everything that we've seen so far, I'm looking at probably a chop sideways for a couple of days. Maybe PPI gives us the juice to move up again, or completely changes the story so that we fall back down into the chop that we were thinking about before. So we'll get more clarity on Thursday. We'll be able to pick a direction better. But assuming if there was no such thing as the PPI happening on Thursday, then this would be bull. Everything else is pointing to mild bullishness, but a little bit of a chop before we get that bullishness. At least everything that we've looked at so far. Okay, so just out of curiosity, SPY gold. Yeah, so money, I'm doing bad, outperforming gold. Does look like money is coming into the market. SPY Bitcoin. Flat. And what was the other one I was going to look at? Yeah, I'm blanking. All right, well, so let's look at the dollar, DXY. A little bit of a chop sideways. So we had a little bit of drama, a little bit of excitement over here, but then we just pulled back and started chopping sideways. Okay. All right, let me take a look at, what did I say I was going to look at? I looked at sectors, and then maybe the equal move ratio, depending on what time it is at that point in time. What's the difference in gamma when the bars are showing positive and negative? Okay, so a positive net gamma means that there is more exposure on the call side or to the upside. And a negative gamma means that there is more exposure to the downside or from puts. Okay? So that's negative and positive gamma exposure. What do I mean by a gamma pocket? A gamma pocket in my world is something that has very significant. I wonder if they fixed my, I get to show you, preview this. Let me see if everything's fixed. This software that's being worked on. Did it load up? It did load up. Okay, nice. Okay, so this is looking pretty good. So if I look at McDonald's and I just say, it's a little less obvious on all expirations, so I'm just going to do September 18th. Oops. Huh. How do I unselect? Oh, there we go. It changes every day. The dates are a little off though. It should be Friday, September 19th. So I'll have them keep working on that. Look at that. So we have a nice big, what I call a gamma pocket right there at 320. Why do I call that a gamma pocket? Because it is significantly larger than any other strike right here. So I know that right here, there's a huge amount of gamma concentrated right at 320. And so if we get to 320, or as we move towards 320, I know that the market maker has to react very strongly to that level. So that's a very important level to the market maker, because it'll determine, it's like if they don't pay attention, if they just, oh, I don't know, I'm just going to fall asleep at the wheel or go on vacation and just see what happens. What it means is that they could end up losing a whole bunch of money. So they are going to be bird dogging that 320, and they're constantly adjusting their hedges as we get closer or further away from that 320. That is going to occupy their main focus. If this wasn't so big, if it was about the same as all the others, then the market makers' focus is split. They're watching a whole bunch of different things. So I want to know that the market maker is obsessed with one single level. And then because of that, then I know that they're going to be constantly making their decisions based on this one level. If they're making their decisions based on several levels, then it gets a little bit murkier. It's a little harder to decide what they're going to do. So if I have a dog that hasn't eaten in a couple of days and I put out 10 bowls of food, I don't know what it's going to do. It's going to run to one bowl, start eating, maybe run to another bowl, start eating, and run around a whole bunch of different bowls. Or is it just going to focus on one bowl and just start eating and finishing that bowl, then go to the next bowl and finish? I have no idea. But if that same starving dog is only given one bowl of food, I know that dog is going to that bowl of food. Okay, so that's why I like to focus on what I call gamma pockets. I know that this level is going to occupy the market maker's attention. And they're going to make all their decisions based on this one level. Okay, that's what I'm looking for. Now this is cool. They've updated a lot of this. Very, very cool. Very cool. And we see that same 320 level right here. Very large positive gamma. Okay, so those are calls in control. So we expect that to rise up towards that 320. And then these red ones, those are the negative gamma levels that Tim asked me about. So we see that to 295 is sort of a floor, right? There's support here, and there's support at 290 and 285. What that means is it's going to be pretty tough for the price to drop below 290, 295, 280. So the further down we go, unless we get through all of this, it's going to be really tough for that price to move downwards. So even if it pulls back and it touches 295, I'm not going to be worried about it. I think that it could still very strongly move towards this 320 by September 19th. Okay, so that's what those gamma pockets mean. The positive and negative gamma. That's what all of those mean. Hopefully, you guys do you guys like the look of this software? I'm excited about it. So we got max pain right here. That means if the trade's below 300, then there's going to be, the market maker is going to be in pretty bad position. So again, unlikely that it's going to go below that 295 or right here, even 300 right here. So targeting that 320 is pretty good. So that what it tells me is I have a nice trade right here. Okay, so I'm well supported, so I can put a stop loss below, let's say 295, and then I have a nice huge target right here at 320, maybe 315, but that's baby. Look how small that is compared to that. So I can set up a really, really solid reward to risk ratio trade right here, because I can target 320, which is almost 20 points away. And then I can give myself, if I wanted to, I could give myself just a couple of dollars, because that pain point right there is probably going to prove to be pretty strong. But I can, maybe another $5 go down to 295 or a little bit below $6. That is a really good reward risk ratio setup. So the gamma levels will help me see not only where positioning is in terms of the options markets. So that's mostly Wall Street, because they're the ones that are going to have the size in order to put something huge like this into place. And then the market maker has to react to it. So I have two types of institutions kind of supporting this 320 level, which is great. That just makes it even better and even stronger likelihood that this will work out. All right. So your wife does the same thing when you fear. That's funny. Yeah, reds are puts. Yes, correct. Net put exposure. Yes. Okay, you guys are liking the look. Good. Will I have the website available through Prosperity Pub? Yes, it'll be through Prosperity Pub when it's ready. We're moving fast. These developers are doing a great job, and hopefully by the end of the month is what I'm hoping that we can get all of this. Right now, we're just validating everything. I have a lot more ideas, a lot more things that we could put into this so that it can give you a lot of really great setups or great ways of validating or coming up with a trade. So this can be used as trade idea generation. You know my 4 parts to every trade: trade idea, timing, execution, and management. So there are a lot of trade ideas can be generated from this and other ways of visualizing the risk and the exposure. It can be simple calls and puts. If we add some skewness to it, we can get into some really great verticals or iron condor type of trades. For example, if you saw a huge red or green right here and a huge red right here that was similar size, or it doesn't matter, they don't have to be similar size, but 2 very clear, huge levels where one was green and one was red, that's a great iron condor trade because you have a top and a bottom to shoot for. So there's a lot of trade idea generation or idea generation, uses for this stuff. And then so we're going to keep on adding. I'm going to build this out to be a really nice, solid. I mean, it's already turning out to be a really nice, solid piece, but you could use it for many, many different trade setups and many different trade ideas. Could MCD GEX change over the next 2 weeks? Absolutely. Absolutely, it could change over the next couple of weeks, but we have to ask ourselves, how likely is that? Okay, so if I look at the overall gamma picture for MCD, so including every single expiration now, I still see 315 right there. I still see 320 right there. But guess what else I see? Well, actually, no, that's what I see. I also see this 310. Okay, so I would want to know, is 310 going to get in the way? Maybe I only have a trade up to 310. So I would figure out where that 310 is coming from. Okay, and I have a large amount of exposure coming off this Friday, monthly expiration. That makes sense. Okay, and we don't have the expiration visualization tools yet. So we'll have a 3D graph and all of that. That might be in the next round of updates, not the first round to be released. But for example, I could go and I can do this upcoming one. And I do see a large 310 right here, and I see a large 300. So this is a great example. This would be a great iron condor out to this, although there's not enough time left in it, so you wouldn't get paid much for this. But if this was a longer, further out expiration, this is a great example of what I was just talking about in terms of a iron condor. So Friday, what we're saying is this 310, all of that is going to disappear. And same with this 300. It could get reinvested at a later expiration date, and would it go back on the same level at 310? Maybe, maybe not. So we'll get more information after a major expiration, like monthly expiration is generally a major expiration, not the weekly ones. They're less important. So we would have to see what happens after Friday, whether this 310 comes back and starts to show up in later expirations like September. Okay. And if it does, then we might have a little bit, but it's unlikely. So how much exposure was there? I should have checked before I did this. 3. Okay. This was not even that much. So that's like, it's only 100,000 guys. So this, even though it looks big in the context, there's just not a lot of exposure on Friday, basically. That's what it's telling me. So basically that picture is not going to change. Another way I can visualize that, I just realized, is that I can just put on only the August 14th and September 19th. I'm going to have them change that. That's annoying. Okay, and so actually what it shows is that 310 is more significant. Why is that? What's this number? Oh, it's not updating. That net GEX number is not updating. It's wrong. It's not just, there's no way it's only 0.03 million on McDonald's. Okay, so we just found a bug for the developers. So it's good that we're doing this together. Thank you guys for debugging with me. So 310 could become, if these numbers are just wrong just on scale, but they're right relative to each other, yeah, 310 could come back and prove as a resistance point for that September expiration. But even if it does, we're talking about a move from 300 to 310, okay? Because we have that max pain right here. I'm sorry, we're currently at, what's McDonald's currently at? 30. Yeah, we're right about 300. So you're talking about a $8 move versus a, depending on how you want to, $2 to $5 to risk. So you have a somewhere between a 1.5 to 1 to a 4 to 1 reward risk ratio trade still. So it's still really good, even if your target ends up being 310 instead of 320. And then what would happen is, as this goes up and it nears that 310, then you'll reevaluate. If it's able to bust through that 310, then it'll be, that 310 will then act as a floor, and then it could continue on to 320. And so what you could do is you could take some profits right there, or you can move up your stop loss to do a trailing stop to that 310 or just below 310, say like 308, and see if it'll continue up to 320. Okay. So good question. Oh, thank you, Bernadette. I'm glad you like it. Is this software for Gamma Pocket members? I'm not sure how everything's going to play out. That a lot of that is on the developer, or not the publisher. So we got to figure out. We're going to figure out how and who we're going to release this to. I don't know about that. I don't know about that yet. 815 310 call shows 28 million. Okay, thank you for telling me that. Yeah, I gotta. Yeah, this is. There must be some sort of scaling issue. I'll let them know. All right, but thank you for debugging with me. Okay. I want to make sure I answered I did answer. It was Gamma. Okay. What else did we say we were going to look at? Sectors. Sectors are starting to get into play now. Now that we see this bullishness in the market, it is relevant to look at sectors, because again, I want to see how broadly it was affected. Well, it looked like it was pretty broad. Basically, entire market rose on this. And we'll also see what are the stronger sectors. Let's look over the last month. Mags, defense, home builders, utility. That's all over the place. About overall, main average, silver, gold, semiconductors. Okay, so here, this is showing bullishness. Okay, over an averaged longer term trend. Communications, tech, QQQ all at the top. This utilities is, you know what? Normally I would say utilities is out of nowhere, but this is going to be because of nuclear. And nuclear is going to be because of blockchain, which is like tech as well, or AI, basically. So that's interesting. If XLU is going to start getting more tied to AI and chips, that's going to change the way that we look at things in terms of the sectors. We're going to have to start rethinking the way that we use these sectors. Well, at least XLU. We're going to have to rethink that, because XLU looks like it's now reflecting bullishness in the AI related stuff. Max. So all of this is bullish sectors, and then industrials and and consumer, that's sort of middle of the road performance. And then what do we have at the bottom? Healthcare, biotech, energy. Yeah, that makes sense. Okay. Construction sector is looking good. Construction sector is looking good. Yeah. Yeah. You could sell a 295, 290 bull put on McDonald's. You could do that, Venkat. Yeah, you could do that. Do I mean open interest is 28.1 million for Friday? No, not open interest. Okay, do not confuse gamma exposure with open interest. No. What it means is that for Friday, the market maker has $28 million worth of exposure, meaning that they have $28 million at risk at that 310 strike for Friday. Okay, so if they are going to start covering themselves, then they're going to have to allocate. They're going to have $28 million in the coffers to start hedging themselves if we start heading towards $310. Okay. All right, so overall looking bullish. The sectors are looking bullish on a longer term trend. 1 month trend was all over the place, and then let's look at 1 week. 1 week is looking pretty bullish as well. And then let's just see today. Home builders, IWM, retail. Okay, so this is directly in response to interest rates, anticipation of interest rates going lower. Retail, SMA, yeah, this is all interest rate stuff. Okay, so let's look at my other way of looking at sectors. Airlines, home builders, banking. Interesting that banking went up. Normally, you don't lowering the probability of lowering interest rates does not help banking, but it's up. Building products, right? Someone was saying construction spending, I think. Yeah, Tim was saying construction sector. Yeah. And then on a 1 week basis, very similar: airlines, lithium, banking, retail, home builders. And then on a 1 month, lithium, electric vehicles, metals, building, uranium. Okay, so the theme that we've been seeing lately was this uranium, lithium, electric vehicle trio. They're all, and what you'll see is that if you dig into those, there are a lot of the same stocks. No, there's a lot of overlap. So they're not completely, it makes sense that they're all kind of moving together because they contain a lot of the same stocks. For example, I'm pretty sure, well, I don't know about your nuclear, but I'm pretty sure, let's find out. I think Tesla, for example, is in at least two of those. Okay, not this one, not uranium or the nuclear. Wouldn't make sense really to have them in there. But some of these, there's overlap in okay, which is why they move together. Okay. But it looks like construction, we did talk about that, I think 2 weeks ago, where we talked about construction was starting to look good. And today looks like home builders and airlines. So this is pretty good. If we're bullish on airlines and bullish on home builders, then we are feeling pretty good about economy and the consumer. So that's interesting to see. Okay. All right. So overall bullishness coming back into the markets. I do expect at least 1 or 2 days of chop because of PPI coming out. Assuming that there's no negative surprises or nothing terrible in that, then we should be able to continue bullishness. I don't know about screaming higher, but at the very least, we should be able to maintain a kind of mild movement upwards with some pullbacks occasionally. All right. Okay. Any questions? Anything you want me to quickly go over in the next 5 minutes? Okay, not seeing anyone answer. I think I've given enough of a delay for people to answer. So I think we're good. Okay. All right. Thanks, guys. I will. Oh, tomorrow I'm going to be on an airplane during our normal live stream hours. So I'm going to try to record a video so I can play it during a live stream. But I need to see. I don't know if I'll be able to stop it because I think I'll already be in the air. So you'll at the very least you'll get a recording tomorrow, but we won't be able to do the live stream tomorrow. Okay. All right, guys. Let's see. A rate cut will drive more business to the banking industry, assuming that it picks up lending. If people start borrowing again, yeah, that's true. Yes. When it comes to selecting a stock from a trending sector, how do you determine the strongest candidates? Okay, we can do that real fast in a few minutes. I held on to SE, got out for some. Well, good for you. That's awesome. Good for you. Good for you. Yeah, we in one of my services we stopped out of SE because of this, but you got in on the earnings jump. So yeah, so that was a risk. But if you said, hey, I already lost so much, I don't care if I go down to 100%, then that's why not hold through earnings? Yeah. Okay, so the strongest candidates, basically, you do a relative strength. Okay, so if the example that we just had was bar chart, we went into URA, there's not that many stocks in this one. So what I go and I do this, oops, not constituents. There we go. So basically I have OKLO, LEU, SMR, and NNE. Those are pretty much all the rest are foreign or funds. So I would want to see relative strength to the market. So if I go OKLO divided by SPY, okay, so that gained a lot of relative strength today. And generally it is gaining relative strength. And then SMR divided by SPY lost relative strength. So OKLO would be the better candidate. And then I don't have to divide, I could just go SMR, and then I could compare that to the SPY. And what we would see is, did that work? Where's the SPY? That's way down here, okay? So let's get rid of these moving averages. Okay, so this came down, the SPY is floating upwards. So relative to SPY, yes, it's strong, but today not particularly so. And if I looked at OKLO, then same thing. It's definitely strong relative to SPY, but today it increased in strength. So OKLO would be the stronger candidate of the two in this particular case. Okay, so that's how I go about comparing relative strength. All right, guys, that's going to be it for today. I will not see you tomorrow live. I will have a recording for you, but I'll see you guys live on Thursday. All right. Have a great rest of your day, and we'll catch up a little later in the week. All right, bye, everyone.